So, let's talk about the parabolic SAR indicator. You've seen it, right? Those little dots on the chart. It looks so clean, so simple. The dots flip, you flip your trade. And it feels great until suddenly it's not. You're getting caught in fake signals, taking back-to-back losses, and it's just frustrating. Well, here's the truth. The indicator isn't broken, the way most people use it is. Today, we're going to break down a 3-step framework to turn the SAR into a powerhouse.
You know, this quote from trading expert Ezekiel Chu it hits the nail on the head. The real problem isn't a lack of tools. It's putting blind faith in them without really understanding their weaknesses. And that's exactly what we're going to solve right now. And this really gets to the heart of the issue. The promise of the SAR is so tempting, isn't it? Clear buy signals, clear sell signals, it seems so easy to just follow along. But the reality for so many traders is just a mess of fake outs, mounting losses, and pure frustration. What felt like clarity just turns into chaos. Let's break down exactly why that happens.
So first up, we have to understand the lie, or maybe a better word is the allure of the SAR, because on the surface, this thing really does feel like a total cheat code for the markets.
So what is it really? Well, Parabolic SAR stands for stop and reverse, and it's basically just that trail of dots you see on your chart. When the price is moving up, the dots are underneath it. When the price starts to fall, they flip and appear above it. Simple, right?
And this is the dream scenario that sucks traders in. When those dots are below the price, it's like the market is whispering to you, hey, stay in this buy trade, the momentum's on your side. Then they flip above, and boom, clear signal to sell. In a strong trending market, it feels like magic. It's not just an entry signal, it also acts as a built-in trailing stop loss, pushing you deeper into a winning move. I mean, it's every beginner's fantasy, a simple follow-the-dots system.
But, and you knew there was a but coming, this is where the dream can turn into a total nightmare. Let's talk about the 80% market trap, and why your supposed best friend can suddenly and violently betray you. Okay, here it is, the hard truth that most traders either don't know or just choose to ignore. The market only moves in a clear, defined trend about 20% of the time. The other 80%, it's just sideways, choppy noise, going nowhere fast. And that is the fundamental problem. The parabolic SAR is a trend-following indicator. That means it was only designed to work in that tiny 20% window when the market is actually trending.
So what happens during that other 80% of the time? Well, the SAR transforms from your best friend into a massive, account-destroying false signal machine. The dots just keep flipping back and forth. Buy, sell, and what felt like clarity now just feels like you're getting chopped to pieces with every flip.
So how do we fix this? How do we tame this thing? This is where we bring in our first tool, the EMA trend filter. This is how we give our indicator a much-needed compass. This analogy says it all, really. Using the SAR all by itself is like looking at a single tree and trying to guess the direction of the entire forest. You're completely missing the big picture, the dominant trend.
So to see the whole forest, we bring in a guide, the 200 Exponential Moving Average, or EMA. Think of this simply as your market compass. It smooths out all that crazy short-term noise and shows you the market's true long-term direction.
And the rules for using this are incredibly simple. Seriously, they're non-negotiable. If the price is trading above the 200 EMA line, the overall trend is up. So what do? We only look for parabolic SAR buy signals. That's it. We ignore the sells. And if the price is below the 200 EMA, well, the trend is down. So we only look for SAR sell signals. This one filter, right here, instantly eliminates about half of the bad trades. Just gone. Okay, getting into a trade is a huge step, but that's only half the battle. We also need a rules-based exit strategy so you can actually keep the profits you make. And here's the crucial thing to understand. Just waiting for the dots to flip to tell you when to get out is a lagging signal. By the time it finally tells you to exit, you've already given back a massive chunk of your profits. We need to be more proactive.
So here's the disciplined plan. Step 1. Your initial stop loss goes at the SAR dot right after you enter. Simple. Step 2. Set a clear profit target before you even take the trade, aiming for the next obvious support or resistance level. Step 3. Make sure the trade is even worth your time. Aim for a minimum of a 1 to 1.5 risk-to-reward ratio. And finally, the most important rule of all, cap your risk.
And for that last step, here's a real pro tip. Cap your risk per trade to a very small percentage of your account, like say 0.7%.
This way, even if the SAR dot is really far away from your entry, your potential loss is never catastrophic. You are protecting the one thing that matters most, your capital.
All right, let's tie this all together. This framework takes your trading from a reactive, emotional process and transforms it into a structured, disciplined system. Think about this shift. You're moving from being reactive and reckless, chasing every flip of the dots, getting eaten alive in choppy markets, and always giving back your wins. And you're moving to a structured and disciplined approach, filtering your signals with the EMA, trading with the dominant trend, and systematically locking in your profits.
So let's recap the three-step framework one last time. First, recognize the trap. The SAR fails in choppy markets. Second, filter the trend. Use that 200 EMA as your compass. And third, systemize your exits to protect your capital and lock in those profits. That's the entire system.
This framework turns the parabolic SAR from a potential trap into a sharp, high-probability tool. So the final question to ask yourself is this: are the indicators you're using right now a tool, or are they a trap?